Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video. Okay, greetings everybody. Let's see what we could do on the euro currency in the beginning of the next week. Well, I have taken a look at the higher time frames on the monthly time frame and weekly, and since price action was not very impressive on the past week, only during the three recent days market has shown some action and has exited from this consolidation to the upside. On the weekly and monthly time frame, the overall situation hasn't changed much. Well, and the technical picture still the same on the higher time frames, and this picture is moderately bullish. But as you understand, the government shutdown procedure understands the United States currently could impact on the overall longer picture, and how it could impact, nobody can tell currently. That's why in the current environment and such situations on the markets, when the market becomes nervous, investors will become more and more nervous as we will approach to the October 17th and so on. Well, in such environment it's better to rely on some clearer patterns, clearer setups that market could give us and deal with them, because these patterns could give us all that we need for trading: the target, the invalidation point when we could place our stop, and the risk-reward ratio. So as we will stick with it, we absolutely understand what is our profit, what is our risk, and we could deal with them. Because currently rely on some long-term setup is just, I think that's not a good idea, because it could drastically change at any day until the government will remain shut down. Any news, any events that will be released on the markets really could shake it, and that's why the non-technical issues, non-technical factors now are dominating on the markets. Markets are driven by the absolutely different factors, as we have discussed on the previous week and the researches. So that's why I offer you to deal with the particular pattern that we have currently on the daily time frame. And let's see what will happen. As we discussed in our previous video updates on the previous week, we said that market has not quite reached the target. Definitely speaking, that was not particularly the target, that was the next resistance. That is the 1618 resistance of that retracement. Okay, and monthly pivot resistance 1. But market hasn't quite reached it and turned to the downside. If you will take a look at the weekly research, you will see that this area was the 127 extension of the big ABCD pattern on the weekly time frame, and market has hit the 127 extension. At least currently, I do not see any other technical reason why market could turn to the downside. Of course, we have the fundamental reasons that after the 4 week of upward action, the traders just have turned to taking the profit. Especially with this all speeches and talks on the rumors on the markets concerning the October 17th. Maybe others will just a bit reduce the positions on the markets. Maybe there are some other fundamental moments, but from the technical point of view, that's just the hitting of the target. Well, market has formed this, as we have on the daily time frame, nicely looking bearish engulfing pattern. And the bearish engulfing pattern gives us, as I said, all necessary moments. First of all, we know the invalidation point is right here. So if market will move above it and taken out of these highs of this pattern will be erased, and we could say that probably upward action should be reestablished to the upside. The market probably will continue to move higher. The target of this pattern, this minimum target, is the length of the bars. So if you will measure the length of this pattern, count it to the downside, we will get approximately an area of confidence support around 134.50 area. That is also, you can see, previous swing highs, broken highs. And that is also the monthly pivot point that hasn't been tested yet. So I can't exclude that if market will start move lower and will move below this area, previous consolidation, that would be the challenge for the monthly pivot point, because we know that market gravitates and tends to test and touch the weekly pivot point, monthly pivot point within the period of the trading. And that probably will be a nice opportunity for that, because if market will continue to the target of this engulfing pattern. So that's why I offer you to focus on this pattern, and mostly also because we do not have any other right now. Well, on the lower time frame, on the 4-hour chart, we see that this pattern is also the butterfly sale that we have discussed on Friday. Market has hit 1618 target, turns to the downside. Now it's tented support, so that is the previous broken border of this consolidation. Also, that is that small trend line to the upside is crossing of the trend lines. And take a look at the daily time frame again. That will be the first FIB support, 135.23 area, slightly lower than market stands right now. Well, another information that we could get from this chart is the ultimate target of the butterfly. So if you will measure the distance between this low and this high, so between the starting point of the butterfly and the destination point, count the extension to the downside, you will get the 127 ultimate target of the butterfly. Well, actually guys, it's not very often could be seen on the market when a price reaches and completes these targets, because they are too extended. But as this target stands in agreement with the daily engulfing and daily confidence support and in general our support cluster, well, I think that it could be taken into consideration. That will be also, take a look, it also stands very close to the monthly pivot point. So that means that right around this area, this cluster support is around 134, 134.50 area. We have a lot of different kind of supports. Confidence support, target of the engulfing, monthly pivot point, target of the butterfly. So absolutely different patterns create the support approximately in the same area, an area between that has the range around the 50 pips. It's right here. Well, trend has shifted bearish here. I don't have the indicator, but you will take a look by yourself. Well, on the hourly time frame, so another moment here. So as we have decided to deal with this engulfing pattern, and we said that market stepped at the support, so we should be our first step in our trading plan will be the waiting of the bounce right back inside of the body of this engulfing pattern on the daily time frame, because market at the support. We know that this support, the support also stands very close, something in this area. So some upward bounce we should expect. And later, the second step of our plan after the bounce, it will be the watching for the particular levels and assessing this situation, assessing the possibility to enter short. So we will take a look at the hourly time frame. We see that we have nicely looking confidence resistance at 135.80 area, confidence resistance. And since euro currency likes to show and gravitates mostly to the 50% levels, I also marked this 50% level. So I suspect that if all will develop right and according with our expectation, we should keep an eye on this area between 135.80 135.90 area. Watch for particular patterns, watch for potential entering on the short side of the market. Also take a look that market will open right around the weekly pivot point. But it will be not enough when market just will reach these areas. We need also to see the nature how it will happen. We not want to see the thrusting acceleration candles, something of that sort, but to the upside, because that also could be the sign not just a retracement, but probably even the continuation to the upside. We need some gradual action, something of that sort, not very steep, gradual lazy action with the middle candles. It will be perfect if we will get some kind of the ABCD pattern to the upside. That will have the target somewhere in our area between the confidence and 50%. That is what we would like to see. So that's been said, our trading plan in the beginning of the week is to stick with this bearish engulfing pattern on the daily time frame chart and wait for the bounce to the upside, since market now stands at the support. Then we will have to watch for the style of this bouncing, so we need the gradual action. In final stage of the plan is to watch for this area for possible bearish reversal pattern. Maybe if market will give us the ABCD and the agreement right in this area, we will try to take the short position. Because making any projections, making any forecasts for some extended future, I think that is not very reasonable right now, when we have, for instance, in such a nervous section, when we do not understand clearly and do not know what will happen in the United States, how this shutdown could impact on the market. And in fact, only the week and a half remains till the October 17th. Everybody knows that. My opinion is the same. I still think that hardly the default will happen, because this is really happens as the planning action. Default can be forecasted for 2 weeks ahead, and usually that event shaking the markets, it's doom and gloom, and they happen suddenly. That's why I think that it will be all will be okay with the debt sale in the United States. But still, the risks exist, and that's why market now stands in some a bit unstable situation. That's why it's better to stick with the short-term patterns and trade only clear patterns that we have.